Good morning. As you can see, we drew straws. Who got the little chair? I lost. So I'm Ryan Rutan. I am the co-founder and CMO at startups.com. I have the distinct pleasure of spending most of my days talking to startup founders and helping them solve challenges big and small. Today, I have the pleasure of doing that on stage with two really incredible folks. I know you got a little bit of an intro to them just now. I want to add a little bit to that. Jose has some absolutely insane experiences building, scaling, and selling companies, many of which were run right here in Guatemala. Some you may have heard of. Blue Kites was the first? Not the first.
It's one of the five that we built here in Guatemala, handmade in Guatemala, hecha a mano. And we sold them to private equity or publicly traded companies, and that's the secret, that the technology was built here in Guatemala.
Perfect. Fun fact, I bought startups.com from Jose, the domain.
We like to sell stuff.
Yeah, he drives a hard bargain, let me tell you. Mitchell also has some absolutely fantastic experiences through HP Ventures, but I want to go back in time a little bit. Anybody taking video today? Anybody going to shoot video today on their phone? I see somebody right here taking pictures. Little technology called MP4, you may have heard of, that Mitchell took from like nascent technology when it was still at Apple and called QuickTime to the video and audio format that most of us use today on a regular basis. So we've got, thank you.
It was a team, it wasn't just me.
We've got some really incredible experience up here. So what are we going to do with it today? The idea is that this will be as conversational as it can be. We're going to ask questions of these two to help understand what are some of the challenges in scaling, what are some of the unique things that we can think about as we scale outside of our own geographic regions. I know there's a lot of LATAM startups here, and one of the big questions is always, how do I get out of LATAM and how do I get into the US market or somewhere like that? So we'll cover some of that stuff. At the end, I believe, and can audio confirm this, can we have a mic go around the room at some point? For questions from the audience?
We'll pay extra.
Audio doesn't care. All right, so we'll find out about that later. If not, all three of us are going to be very approachable post-talk. Come up, ask questions that we don't happen to answer during the talk. So with that, let's dig straight into some of the questions we have around scaling. I'm going to go to Jose first. And throughout this, they both have experience as operators and as investors. And so at various times, I'm going to ask them to put on one hat or the other so that we can get that specific perspective. As you think back to your early experiences with building and growing those companies and scaling, what were some of the most unexpected barriers to scale that you encountered?
Well, I mean, once you find and build a product and find market fit, I think for us, it was a focus on sales and positive unit economics. You live and die by your economics, your CAC, customer acquisition cost, the lifetime value. And if you don't understand that, it's very hard to scale. So I feel like the companies that we've been able to start, grow, and scale were the ones where we really understood the product that we had, that we built, the fit in the market, but we focused on the unit economics. We put everything we had on sales, and we've seen the companies scale. And sometimes when we lose the mark on the economics, we pay the price for that. So I think it's a matter of building the right product and then focusing on execution, and you live and die by the positive unit economics of the product that you have.
As you went through that process the first time, the second time, did it start to become clear that there was a pattern here, that these were expected challenges amongst scale and you were able to kind of address them in the same way, or was each one a unique snowflake that melted in its own way?
Look, when we started, we were probably, we didn't know what we were doing. So we were just basically, building stuff with a vision, with our mission, with the passion that we had for the product. I think if you add the ingredient of venture capital to it, it adds another perspective that sometimes you don't share as an entrepreneur. And I've failed at that, and have a pretty big one that we can discuss. But for example, I remember going to Palo Alto. By the way, what a beautiful venue here. I mean, you feel like you're in the forest. because I wanted to learn, what's the secret of Silicon Valley? I'm an immigrant, but I live in Miami, so it's still pretty far from Silicon Valley. And I go in there and I talk to my friend in Palo Alto, and I, give him the presentation of my company, and he's like, he'll say, you know what, I love you, I love the company, you growing it, but this is more for a private equity. Show me that you can 10x your projections. And I'm like, but, I don't see it. But, I came away with like, I need to 10x. And our company, healthcare.com, which again also we built technology here, kind of went through that. We were raising funds at the top of the market. And I remember calling Tiger Global, Coatu, Altimeter. And those guys were like, oh, well, you're growing at 70% year over year. We only look at companies that grow 100% year over year. So you don't make the mark. So I'm like, what's the incentive here? It's like, who cares? Just grow 100% and then we can talk. So I'm like, okay, I'm not part of the party. But yeah, we ended up raising 200 million at $1 billion valuation, which they call unicorns or whatever. And very quickly the market turned on us and we're like, okay, we gotta go back to basics, which is positive unit economics, positive margin, making sure that so the lesson is that you can't get ahead of the reality, which is what your business, the real scale, positive growth that makes sense, focus on unit economics. So that's
Thank you.
Like the story.
I want to circle back around to some of this when we talk about the investment angle, because there's some things I want to talk about in terms of the shift in mindset. Like, how do we know we're at that point where are we deciding to scale, or are we reacting to information from the market, from VC, from PE, where they're telling us this is what you need to do to be viable for us? And do we start to let that inform our thinking versus just going back to unit economics and all the things that we know matter as fundamentals of business? So I want to come back to that. Hello, friend.
Hello.
I'm going to get a swivel chair next year. Mitchell, would
Yes, sir.
you do us the favor? I had the pleasure of catching up with Mitchell earlier in the week, and he shared a story with me that I think is really interesting because it does highlight kind of an unexpected challenge in scale. When you were working on QuickTime,
Yep.
and there was all the barrier to how do we get this outside of Apple? How do we make this a more unique and ubiquitous tool for the rest of the world? You had a really nice story that I think illustrates that really well.
Yeah, one of the problems when I arrived at Apple, I arrived at the Apple at the very bottom, 1996, if you can imagine such a time period. And QuickTime was like one of the only family jewels that was going well for Apple at the time. And the reason they hired me is that I was the only Apple-friendly person that also knew Microsoft and Intel people and could get along with everybody. I knew the enemy well because I was selling things into that marketplace. I was involved with Razer and chip companies and this sort of thing. But the Apple management team took a while, but they realized that in order to scale out of the Apple ecosystem, they had to be able to do something with Windows. And there was this huge cognitive dissonance about giving away the family jewels to Microsoft at a time where they were being crushed by them, right? So we literally had to do a common source code release, something that said, develop once and deploy everywhere. And I got to tell you, nobody in the company except the management team wanted me to do this. All the employees hated my guts. Microsoft hated my guts. At the time, they wanted, they had AVI and ASF, and there was real audio, real video. There was 9 different formats for things. And our goal was to say, make it once and it'll play everywhere. And that just wasn't done at the time. So I had to do 3 things. First, I had to make money with QuickTime. It used to be free, so how to monetize it. Second, we had to get it on Windows. So the engineering team got behind it and created something that could literally live in both places, so video and audio would play everywhere. And it actually got to the point where the employees thought this was such a bad idea, they stole my machine, my laptop, off my desk to stop me from working. They went into my office. And
That's one sign of innovating, I suppose.
yeah, it was and the other side was Microsoft kept kind of breaking the code every week. We would ship a release and they would kind of do something to make it not work. So we had to overcome all this. But the thing was that once we got the development community to understand, developers are only interested in 2 things, either how to make money or make me famous. So you're going to get on the stage with Steve Jobs. Great, I'll do something. If we're going to make $1 million a year with you, I'll do something. Other than that, developers don't want to do much work, right? So anything to reduce the friction of all this constant digitizing and redigitizing and making different streams was very attractive. So once we released it, where it could play everywhere, we got almost 5,000 to 8,000 developers in the first year saying, we're going to try this thing, even though it's risky and Apple changes their mind and they might pull out the rug from under us. And it was a testament to the team to make this thing all work. And they came up with this thing called the QuickTime Media Layer. But we kept fighting Microsoft. And eventually, the way that we overcame Microsoft was to literally give QuickTime 3 away. We gave it to the MPEG-4 committee and said, have it for free. And that file format, which now lives on as MP4, is QuickTime 3. So that's how we defeated Microsoft and the constant stoppage of what we were doing. It's a crazy story, but it's true.
I think it really illustrates the point well that sometimes the barriers to scale are not obvious, right? So you have the barrier around how do we monetize this thing, which ultimately you didn't end up doing, but you created a standard that allowed you to open your development platform to significantly more people. So in an end-around way, you got to the commercialization of it. But
right. If you want to look up something fun, look up Microsoft Knife the Baby. You'll find it in the historical formats of this big lawsuit about Microsoft telling us to kill this product. So, yeah.
All right, I'm going to shift back to you, Jose. I want to talk for just a few minutes, and we're doing okay on time, but we're not going to get to everything we wanted to today. It's okay. I do want to talk about moving out of the region, right? So you have experience in starting in one place and then figuring out how do we take this elsewhere? How do we move beyond the current geographic parameters of what we're doing, and how and when does that enter into the decision in terms of scale?
That's a big one, and I would say it's not only for us in Latin America, but I feel like Europe is kind of Latin America because you have, countries, they speak different languages, different kind of, it's the EU, but you have different regulatory bodies and stuff like that. And the beauty of the US is that you have like 50 countries with kind of like the same regulatory thing, the same language. But that's why it scales because it's like standardized. You have, and that's the beauty of the market. But I think that if you look at Latin America as another 50 states, with a common language in Spanish, then you have obviously Brazil. It opens up opportunities for scale if you kind of look at a product that, especially a technology solution that can scale. And if you talk to any Latin American entrepreneur, they always think, okay, I'm launching in Argentina, but I'm raising capital because I want to go to Mexico and Chile or whatever. So everybody thinks about expanding cross-border, and again, it's difficult because all the regulatory work, and I wish it would be easier. Kind of like in the U.S., you register a company in Delaware, and you kind of like can do business everywhere. But it's the challenge and the opportunity. For us, we've kind of looked at it the other way by, okay, what are the benefits or what are our assets in Latin America? And for us, it's been talent, the access to talent, the economic arbitrage in cost, the proximity to the U.S. I mean, 2 hours away, that's, can't even get to New York from Miami. So we have those assets, and we've said, okay, we'll leverage those assets and focus on building something in the U.S. And, we've been able to scale that way. But now we're looking at, south of the border. We're still building technology in Guatemala, in the healthcare space, that, now it's rolled in maybe a handful of countries. It takes a while, but once you're breaking those barriers, you could look at Latin America as a network of states that speak a common language, and again, it's a challenge, but I also see it as an opportunity. A lot of talent. You have the economic arbitrage, and I think challenging, but you could do it. We're doing it.
I'm going to stay with you for a second. I want to dig into a little bit of the operational elements and challenges that we run into when we scale, and I want to get them from two perspectives. I'm going to ask you to keep operator hat on, Mitchell, investor hat.
Sure.
And the way I want to look at this is, what are the operational difficulties, challenges that we want to be aware of as the founder, the operator of the company, when we begin to enter into that scale? I'll ask the same question from you, Mitchell, but I want you to think of it from the investor perspective. And what am I looking for in terms of, here's some potential roadblocks this company's going to have for scale from the external perspective? I had the pleasure of going around and talking to a ton of founders over the last couple of days. And there were a lot of questions in this vein around, I'm thinking about scale in a certain way. I'm approaching it in a certain way. How's the rest of the world, particularly the investment world, looking at what I'm doing? So that's the genesis of the question.
So challenges of scale. I mean, I think that in a startup, you're always going 100 miles an hour, and the bus is just going. It takes. I'm not very good at like team, but it takes a focused team with clear deliverables and mission and vision. So I think that finding a cohesive team and being able to manage that team correctly it's key to management. I'm lucky enough to have partners that we've been able to leverage our different skills, and some of them are great at managing certain teams, technology, or building them. Some are more into sales and operations, but you're driving really fast, and you always you're ahead of team. Technology is always 6 months behind. Sales are always a year behind. So you're like you're trying to push as fast as possible, and while you're doing that, you're breaking a lot of things. So that's kind of like the life of the typical startup entrepreneur. You're trying to go as fast as possible, but having good management, having the right team, upgrading the team when they've kind of hit the limit, and trying to find because you figure out that some people are really good at the early stages, like me. Some people are really good at when it gets to 100 people, not me. But it's key. It's kind of like the team is all, and driving them and focusing them on the mission is key while you're again driving 100 miles breaking things.
In my experience, very similar. The team is kind of core to everything that we're doing, and has to be, right? Especially at the early stage of the company when there isn't a lot of product, there isn't a lot of knowledge. We're just figuring out as we go. So the team is sort of everything you've got. Did you find that there were specific points? I can go back to kind of milestones in terms of numbers of people where things changed significantly. Like at 25, we had like a very specific culture that I could recognize. At 100 people, all of a sudden, there's subcultures starting to appear, and that creates its own challenge. In my experience, one of the other really difficult places wasn't just the absolute growth of the team, it was at the pace at which it changed, right? So we doubled the team, we went from 25 to 50, but we did that over a period of like 4 years. We tripled the team from 50 to 150 in 12 months, and that for us was where stuff blew up.
Right. Yeah, I mean, it happens, right? It happened again with our insurtech company. I think we went from, when we were going all in, we probably went from 90 to 500 employees in like a year. I mean, it was like super fast growth. And again, a lot of things broke because, you don't have the culture, you cannot keep the pace with technology, what needs to be delivered. You have a huge tail of stuff that you want to deliver for the team that you just hired, that's not just sitting there waiting for it. And, things start breaking, sometimes you get caught with that growth, and it's kind of fun to see, wow, but I probably would not recommend it again. I probably wouldn't do it again. And then obviously once you hit that inflection point, and gravity pulls you down, you have to like, okay, we made a mistake. We have to basically wipe out the series of mistakes that we've made and go back to basics, which is the healthier thing to do. Some people are not able to adjust, but you have to adjust fast if you want to survive. And it's a painful process, a learning process. But yeah, I mean, like I said, we've all made mistakes of trying to scale too fast because we're chasing the growth, we're chasing the funds, we're chasing the VC, we're chasing the higher valuation, and we missed the mark. And we learned by doing and by terrible mistakes. But I like probably a more organic approach to scale, a much healthier approach, which.
Perfect. Mitchell. So all that said, we've got the team is the most important thing from the founder's side of things. As you're sitting in the investor chair and you're looking at a company, you're evaluating them for possible investment, acquisition, whatever it might be, you're looking at the team clearly. That's one of the things we know everybody talks about. What else are you honing in on that are potential, like, this makes me really want to get involved with this company because of something they're doing operationally, or this is a red flag? What should founders be thinking about from that perspective?
Well, going back to the team piece first, I really want to look at the co-founders carefully and see whether the pressure that they're under is tearing them apart. Are they able to finish each other's sentences? Are they at odds when they're doing the storytelling, like one guy's saying something, the other guy's saying something different? That making sure that they're on the same page is really important. And especially at early stage or your pre-revenue, where you don't have like real metrics to work with, then you're dealing with a lot of emotional intelligence instead. Is this one of these founders going to get divorced and then the wife's going to run off with half the stock and now I got another stockholder to deal with? I mean, there's all kinds of crazy things that are going to happen that you have to start thinking about. Then as they start to scale, do they really have a good sense about what their competition looks like? I find that when I'm looking at pitch decks, one of the most effective things in a pitch deck is the competition slide. They find all the things that are not competitive to them, so they look great. But if you leave your region or leave your country, suddenly there's a whole bunch of guys that look a lot like you, and you don't look that different. So there's like control of the numbers, there's operational intelligence. Do you really know that you've got the smarts to overcome these particular competitors and where you fit? And I find this over and over again, like someone's leaving Korea or someone's leaving Guatemala and they come in the United States and there's 9 more apps just like you. So if you're going to unhook these guys or come into a region that you don't belong in or never been in before, are you 10 times better than the options that are out there? I mean, you can't just be a little bit better. And if you're unhooking something that exists, no one's going to unhook Excel anytime soon unless it's like so much better. You've removed so much friction that everyone's really glad to get rid of that. So paying attention to that. And then, do you know when you're going to run out of money? I mean, it sounds silly, but do you have a good sense and command of the numbers? So you know what your burn rate is, and you know pretty much what your fundraising situation is and what your income is. One of the questions I ask frequently is like, do you know when you're going to break even? Can you kind of forecast? I mean, it doesn't have to be next week, but if you can kind of do some math and do some estimates, do you have a sense for when that's going to happen? If they have no idea, that's scary. It's silly. Now there's a really good book that came onto the market in the last few months called Global Class Going Global. And what they've done is they've wrapped up all the best practices of leaving your place and going somewhere else. This is all known best practices, but they've really put it into one wily textbook. And you can kind of go through there and say, oh, here's how to do a business canvas, and here's all to do the things you need to do to leave the country. It's really a great mechanism to do this. And if you spend some time looking at that, you'll see all the tick lists of things that you could miss. But for me, it's that first, like, how does it feel? Do they know what's going on? Can they protect themselves? That's the other piece. A lot of people haven't filed for IP yet because it's too early. Do you have some kind of moat that will keep everybody out of your area? If there's going to be an exit that's not going to be an IPO, and most of you are not going to have an IPO, and there's an M&A, what are they buying? Are they buying the people? Are they buying some process that you have, some IP that you have? Most corporates want to know that you filed for patents. Now, maybe you haven't filed for patents yet because you don't have the money to do that until you get your fundraising. That's a totally legit answer. But some people say, no, I want to keep it as a trade secret. Okay, well, what's the protection? If someone's going to come along and buy your assets, how are they going to be protected? And who's going to go to war with the materials that you've got? So those are all the things that I'm thinking about as you're going into various different markets, regardless of what the product category might be.
Well, the good news there is, if you were listening, there weren't any trick questions in there, right? Nothing that you're looking at is some sort of surprise. It's some sort of odd expectation. I cringed a little when you were talking about the
surprise
competition
for me is when
slides.
they don't have any answers.
That's
the
it.
Surprise.
I talk to founders all day long, and I'm frequently asking, like, what's your business? They'll tell me about it, and like, whatever the top competitor that comes to mind, the closest analog to their product, and I'll be like, oh, it's like this, and they're like, what's that? Like, that's not a good answer. I shouldn't know more about your competitive market than you do.
Yes, that's another problem.
Yeah.
Is if I'm asking questions and I know more about the product and the market area than you do, that's a huge red flag. If I'm rattling off companies that I say, well, this is in your space and this is in your space, and you don't know about them, that's a real problem.
Not a good look. Okay, we've just got a couple minutes left, but I want to come back. I want to now talk about looking at things from the investor lens, and I want to think about this sort of the balance between traction and potential for scale, right? So there's this question when we're thinking about investing around what have they already done versus what are they capable of doing, right? So we need to see that they've accomplished something, but we also want to know that there is some chance for them to grow really big. How do you balance that?
Yeah, well, I mean, investing is another totally different trade. I mean, I've been an entrepreneur for 23 years. I'm still working on it. Maybe been investing for 15 years and still learning. So it's very hard. So I wouldn't say that I'm a good tech investor. I'm learning still. But look, I mean, I look at, I like early stage, right? Because I like when somebody has an idea, and I like the kind of like imagining this thing coming into life and creating something from nothing. So the good thing about investing in this project is that you can be involved in many, and creating teams and putting ideas to life. Look, I mean, I think that you have to be somewhat disciplined in, looking at the entrepreneur and the team. Are they capable of building technology? Because that's what's going to make or break any type of project in technology. Have they done it before? If they're like, oh, I'm not a tech guy, but I'm going to hire some guy and they'll build anything that I need. No. So they need to have the picks and shovels already in there when it comes to technology. That's number one. And then the team has to have some type of affinity to the product that they're building, some expertise, something. And you as an investor, sometimes we invest in things that we don't, like a vertical that we don't know anything about, but we do want to learn because we feel like there's some growth in this area. So we force ourselves to kind of like learn more, and we leverage the entrepreneur to kind of like teach us for free, what is it that they're trying to do in this new market that maybe has the possibility of growth. But again, number one is, what are the foundations? Are the foundations there? The right entrepreneur, which is sometimes very subjective in how to, kind of knowing that, but is a team around it that can build a product. And I think those are the foundations of when we start looking at deciding where to invest in, that kind of like the ingredients are already there. We don't want to just like, go like this and like, here's a check so you can hire the people that you think are going to help you. So the team is key.
Perfect. So Mitchell, early stage, I'm assuming that you're focused more on slightly later stage, more developed stuff.
I'm in multiple funds, so
yeah. Okay, fair enough.
Series
fair
A
enough.
for HP, pre-seed for
HP
Ignite
Ventures,
Excel.
so,
Right.
Okay. So just to give the perspective from the other side, for the later stage stuff that you're looking at, how different is that, right? Are you looking at more traction? Still, I mean, clearly scalability is important, but
for later stage, now you're looking at reputational risk. Is HP going to take this thing on and ship it and put their name behind it? So it's got to be good enough where they're not going to be embarrassed by shipping that product either as a partner or white label or OEM or this sort of thing. So it's got to be pretty solid. It can't, you're not going to be doing anything that looks like it came from a high school science project or Kickstarter at that point. We're way, way past those stages. You're going to have two solid co-founders. By the way, I was going to ask you earlier, do you ever invest in a company with a single founder?
A single founder?
Single founder?
Yeah, probably.
Really?
Yeah,
for me, it's the power of two. I always I want to see two guys. Even the Sith had an apprentice, So it's a technical guy, there's a business guy, someone's going to do the decks, someone's going to do the slides, someone's going to do the business modeling, the other guy's going to keep programming, right? But anyway.
Well, we are right at time, so before they come up here and drag us off the stage, but all three of us are available for questions afterwards. These two told me they're going to be really sad if you don't immediately pester them when they walk off stage, so please do that. They're not from here. I live here, so you can find me anytime in the future, but these two are only here for a very short time, so take advantage of it. Thanks, everybody. Hopefully this was informative. We know a little bit more about scale. See you soon.
Thank you very much, guys.